One of the big mistakes why a lot of newbie traders out there will not be profitable and remain how they are is basically because they don't have a trading routine. And this is not really their fault, because most of you got started without a mentor, just like me, and that's why I'm creating this series to actually help you. So basically in this video, I'm going to share with you how I was able to set up a trading routine and my 5 simple step trading routine that I actually follow every single day before I trade as a self-taught trader. And if you're a newbie trader, I want to actually take every single point I'm sharing in this video, as it will actually help you, because trading without a routine will actually cost you way more, and it cost me a lot. That's why I'm adding it up to this series. So guys, before we proceed, let's give a big shout out to our today's sponsor, lightfinance.org. Light Finance is one of the best trading platforms out there, boasting over 4.3 rating on Trustpilot, which means that they are highly positive and users have positive view of them. And they offer one of the best and easiest trading platforms out there as well. So basically, when you come over here, you have access to MetaTrader 4 and 5, C-Trader, so forth and so on. And they offer some of the best spread, which is as little as 0.0 spread for some trading pairs, and also has the fastest execution when it comes to trading. On top of that, they offer over 600 trading pairs ranging from Forex, stock, commodities, cryptos, and so forth and so on. And to top it all up, it's even advisable for non-good traders to actually use, as they offer copy trading, which is a way for you to actually make profit without having to know how to trade. All you basically have to do is simply copy already profitable trade on their platform from other profitable traders, and you can basically be making profit autopilot. Here is my simple 5-step trading routine. Step number 1 is picking a particular section to actually trade. Now, one of the biggest mistakes you can make as a trader is trying to trade every single section in the market. And what this basically means is simply trading the London session, the New York session, the Asia session, and then the Aussie section, which is the Australian session, which is Sydney session, and something like that. Like, trading a lot of sessions will actually confuse. Now, this doesn't mean that the sessions are not working or something, but when you trade a lot of sessions, it will actually lead you to take a lot of trades that are not really necessary. So what should you do instead? Pick a few sections and focus on. And for me, I picked 2 sections, which is the London and then the New York session. Now, the step number 2 is simply my pre-market preparations. Now, what are my pre-market preparations? Now, these are basically the things I do before the market actually opens. Now, the first thing is simply I mark the previous day high and low. Now, I always use the previous day high and low to accompany my strategy to make sure that I'm not trading against daily key levels. So the thing I do is simply, the first thing I do before the market actually opens, I mark the previous day high and low. Now, I do this one in the night before the next day that I'm actually going to trade. So basically, if I'm going to trade on Tuesday or Monday late night, when the daily candle for that day has actually closed, I'll have to mark the high and low of that day before I wait till the London session to do my actual setups. And the next step is simply identify key support and resistance levels on the daily time frame as well, because one thing I hate so much is trading against daily key levels. So I also do all of this before the market movement actually start, because the market always respects what it has done in the previous day, and at times even some old levels as well. So on my main trading day, I don't like doing too much, so basically I do these things ahead of my main trading day. So I mark my key support and resistance levels as pre-market preparation as well. And after doing these 2 pre-market preparations, then I wait for my main trading day, which is the London session. Then I do my main setup on the 1 hour time frame, because I trade the 1 hour time frame, but before that I look at the daily time frame as well. So after marking all these key levels on the daily time frame, then I wait till the London open. Now, once the London market open, and I wait for about an hour into the London open, then I'll start doing my setup on the 1 hour time frame. Now, this will I mark my key trading levels, my liquidity levels, and every single thing that I'm going to trade from. And for this, I trade on the 1 hour time frame, so I do those on the 1 hour time frame. However, I take my entries on the 30-minute or 15-minute time frame, depending on market conditions. Now, my daily routine number 3 is basically clear rules before entry. What this basically means is simply the market must obey all my trading rules and must be 100% clear before I enter. Like, for example, what this basically means is simply, if this book here is my setup, before I take any trade, I need to make sure that this book actually appears in the market. Like, this book actually appears in the market just as it is. For example, if this is my setup, then it must appear exactly what is here before I actually take my trade. So if it doesn't appear, no trade. And what this basically means is simply, if you don't see your setup in the market, don't take any trade. And if you have to squint or basically stress yourself before you find your setup, then just walk away. Like, I was doing setups today and I came across a market. Was it GBP USD or it was GBP JPY, one of those pairs? My setup wasn't, it was looking it wasn't looking it. What do? I just walked away. I ended up not trading today because, and I didn't even look at the chart again. So basically, another thing is simply I need to make sure that my setup is very clear. If my setup is not clear and highly visible, sorry, I'm not trading today. We come again tomorrow. And moving up to the fourth one is basically I need to have my risk management all checked. Now, risk management is very important because without risk management, you blow your account every Eke market day. You might not understand what Eke market day means, but those people who watch Nigerian movies actually knows it's a usual market day in the eastern part of Nigeria. So basically, for me to take any trade, I need to make sure that I have my risks defined, my risk management, every single thing is in place. I want to talk about risk management. Here are the three things that I actually look into. First one is simply I have to risk a small amount per trade because my trade often come with a high risk to reward, so a minimum of 1:3 risk to reward plus, which means that I don't have to risk much. So for example, if I'm having a $10,000 prop account, then I'm risking about $60 to $100 maximum per trade, nothing above that. Anything above $100 means I'm against my risk management, and which means that I'm keeping my risk below 1% for every single trade I take. Rule number 2 is simply I must accept my losses quickly. If I take a trade and it hits stop loss, I'm done for the day. We are not going back into the market again. And this one big mistake a lot of you don't know, and this is a key part of risk management. The earlier you learn to accept that you just made a loss, the better for you. Some of you make loss and be like, I don't believe I make this loss, let me try to recover it. Recover? Well, you are about to blow your account actually. And this is one of the best things that have saved my ass till date. And finally is basically I stop after a set number of trade. Now what this basically means is simply I have a target. I don't take more than 2 trades in a day, which means that on my actual trading account, I don't take more than 2 trades in a day. And if I'm risking, the reason why I don't take more than 2 trades in a day is simply in a day I risk a maximum of 2%. So meaning if I risk 2% in a day, I'm done for the day, nothing more than that. So if I take my first trade and it hits stop loss, well, since I'm still not up to 2% yet, I can take another trade again. So no matter what, I have the rule. It's either I take a maximum of 2 trades per day or I risk a maximum of $200 per day. So even if I risk this $200 in a single stupid trade, I'm calling it a stupid trade because I'm never risking $200 in a single trade. So, but I'm just calling it a stupid trade. So if I do this in a stupid trade and it hits stop loss, I'm done. So no matter what, I'm not taking more than 2 trades or risking more than $200 in a single day if I'm trading a $10,000 prop firm account. And routine number 5 is basically post-trade review. Now what this basically means is simply at the end of the trading day, so when I'm taking my trade, I don't clear my setups until I'm done for the whole day. At the end of the trading day, I go over and then take a look at my trade and look, okay, why did I take this trade? Okay, all my full setup is in check, good. Did it hit TP? Did it hit stop loss? Did I keep to my rules? Did I keep to my trade management rules and every single thing? So I do post-trade review to actually see that what I followed every single thing, and anywhere I see that what, okay, here I did not follow my rules, so I need to mark it, okay, here I did not follow my rules. So whether that trade was a winner or a loser, I don't really count it among my trade. So any trade whereby I don't follow my rules is not counted, because let me be honest with you, even professional traders go against their trading rules once in a while. Like for example, during fundamental days where there are high impact news like NFP, CPI and those highly volatile news, I trade the news at times on live account. So if I'm trading the news, at times I don't use my setup to trade the rules. So basically I trade the news for what the news is about to print. So for those trades, I see that what I did not follow my rules and I write it down. And apart from that, there are days whereby we don't actually follow our full setup. Maybe I was waiting for a 30-minute confirmation and I know I'm not going to wait I don't have that time to wait. So basically I'll go with a 15-minute confirmation and so forth and so on. So this slight mistake as well, I take notice of them to see what is going on with my strategy as well, and this is very important as a trader. So for those of you who are watching this video and also going to build your trading routine, here's my 3 simple tips for you. Number 1, don't overcomplicate your trading routines. Make it as simple as possible. The simpler it is and the more realistic it is, the better it is for you to develop as well. And secondly, don't trade every single day just to feel productive. Don't try it. If there's no trading opportunity, there's no trading opportunity, walk away. Like today, I had a trading opportunity, but the market did not give me the confirmation when I wanted it. By the time I came, the market has already printed the confirmation and moved a bit far away. So I just didn't trade, because if I'm taking that trade now, it's either I have to use a lower lot size and then a bigger stop loss position and then wait for a huge target. So I don't want to go through that stress, so I just basically skip trading today. And I had a setup on gold and it has already smashed TP if I had taken it earlier. But then the rule remains, you don't have to take trade to just feel productive. If the setup doesn't feel convincing enough, just let it slide. And thirdly, don't copy someone else's routine blindly. A lot of you might go and copy people's routine, and because it worked for them doesn't mean it worked for, like, this routine worked for me doesn't mean it will work for you. Like the New York session and the London session worked for me doesn't mean it will work for you. There are people that are making a lot of money off the Asia session as well. So basically, don't just copy routines blindly. Before I came across these routines, before I settled for them, I back tested them and forward tested them, blew a lot of prop firm accounts in the process before I actually found what actually worked for me. And I also tell you to try your best to actually find what works for you. Don't just copy other people blindly.